Greetings guys, welcome to this wonderful short video. I'm just going to be teaching you about trading the head and shoulders pattern. So what you need to know is that we have reversal and continuation patterns. So when we see something like this, which is the head and shoulder, we need to know that this is a reversal pattern. Head and shoulders, they are reversal patterns, meaning they will show you when the market is reversing from an uptrend going down to a downtrend. So that's the purpose of head and shoulders. If it's inverted, it is like this. It is going to show you a market shift from a downtrend going all the way to an uptrend. So they are here for the purpose of showing you a reversal when the market is shifting from a sequence of higher highs or higher lows into the sequence of lower highs and lower lows. So the first thing that you need to spot as a trader, it is first to understand the market direction, see where the market is going first. For an example here, we can see that the market has been going all the way up, as we see that it started somewhere down here and now it is currently at this point here. So although there was just a slow down here, again this point was breached all the way with the breakout here. So overall it is an upward market, as we can see that it started low and currently it is high. So once you are able to spot the direction or the trend of the market, that's the first point, that's the first step. Once you have spotted the trend, then now your requirement it is to closely pay attention to the waves. And I'm talking about a wave, I'm talking about the correctives and the impulsive. So remember, in an uptrend, the impulsives are those going up and the corrective are those going on the opposite side. So usually the correctives are very small and the impulsive are very big. So if it's vice versa, you know that it is no longer an uptrend, it's a downtrend. So once you have spotted these waves, now it is your duty as a trader to observe clear, because it is easy for you to spot a pattern after it has formed, but it is very hard for you to spot a pattern while it is still in its formation. And that's the best thing about price action. A lot of traders, they are able to see the head and shoulder when it is clearly formed, but they can't be able to see it while it is still in formation. So in this video, I'm just making an example of this uptrend shifting into a downtrend. However, this is applicable when a downtrend is shifting into an uptrend. So you are just going to apply the same method in a different trend. So let us just watch out here. We can see that now it was impulsing, and let us see the market moving. So you can see that, okay, it is slowing down, entering in a corrective. So now you can see that this is now a corrective. So you have just to pay attention on every detail of the price if you don't want to miss anything. So let us see what is going to play out. So you see, there we are. Now we have another impulsive again, because the corrective was broken. So here was the corrective, here was the corrective. So it was broken here. So now we have another impulsive. So it is in this impulsive that we are going to be, that our attention is going to be attracted. So let us just see the price playing out. So there it seems like already this impulsive is struggling. Already you can see there is market struggling. If you are to pay attention here, there is this consolidation. It means that the market is struggling. However, how can the market struggle just after this short wave here? Compare this wave here with this wave here. You can see that this one, it is almost half. It is almost half of this one. It is almost half of the previous one. So this is telling you that already the buyers are decreasing in strength. So once you see the buyers decreasing in strength, now already you are waiting for some kind of a reversal pattern. So let us watch it. Let's watch it. There we are. Let us watch and see again. So now we have this structure. Now we have this structure. You can see that this support is almost on the same level. We have a high, we have a lower high before, and then we have these lows which are on the same level. Remember, the shape of a head and shoulder, there is this neckline here. So already we have this, which is a neckline already. So already we are waiting to see such a thing. We are not waiting to see it after it played out. What we are waiting for, we're just waiting for price to come here, and once it breaks out this level, we are putting our sells. That's how we should trade it. So let us just observe. Okay, we have our neckline here, we have our shoulder, we have our head. So we are already doing estimations that we don't know where our shoulder is going to be from this side. So already before it can be complete, before the pattern can be complete, you should have the ability to see it while it's still information. So we have the neckline here, and we have the head, we have the previous shoulder. So we are waiting for this shoulder here and the breakout of this neckline. So here we'll be pressing ourselves after the neckline is being broken. So let us wait and see. So you can see that price is pushing down. It means that this can be some kind of a shoulder here. There is a delay in price. This can be some kind of a shoulder. So there we are, pushing up, delay again, and then there was a spike. Let us wait and see. Remember guys, the reason we are not panicking in all the actions that are taking place here, it is that we are not interested in entering in a shoulder. We don't enter in a shoulder, so we don't care even if the price can deceive us, as we are just waiting for this neckline here to be broken on the downside. Then we are good to go. So let's wait and see. Still no shoulder. There we are. This might be it. Okay, still pushing up. There we go. So now you can see that we have a high. So if we have this high, we should spot if this is lower than the previous one. Yes, it is. So this can be our shoulder. So now we are just waiting. Where is this thing? Where is it? So now we are just waiting for the break of this neckline. We already have a head, we have a shoulder, we have also a previous shoulder. So let us erase this sign here. There we are, and let's watch it play out. Still not breaking. There we are. So now here we have a breakout now. So as soon after the price broke out, that's where we enter our cells here. So once we have entered our cells, then it necessarily means that our stop loss is going to be somewhere around here, or just above the neckline here. So it depends on your account and in the level of your risk on where you're going to put your stop loss, and then we are in a selling position, and then we are good to trail our stop loss and to take our return. So let us see. We had a retest. Still price pushing down, and there we are, price going all the way down. So this is what matters, guys. You should always focus on the neckline. It's all about the neckline. And all of a sudden price is clearly going down, and seeing this retest here, it is still retest on the neckline. That's why I said if you are to put your stop loss, you are to put your stop loss above the neckline or just above that high. So you can see that our stop loss could not be triggered. So this is how you should go around trading head and shoulders, even in a case of an opposing market. That's how you should go about trading it. So I hope this was helpful, guys. So thank you for watching this video. Remember to like, share and subscribe. Enjoy your trading.